Let's talk about the realty space now. Realty stocks have been buzzing in trade, not just this week, but earlier as well. But this week itself, in an otherwise consolidating market, the realty index has been up around 1.5%. Mumbai property registrations also picked up in August. Parvez Akhtar Qazi, who's the ED at Nuvama Group, joins in to discuss their call on the sector. Parvez, there could have been some sort of pre-buying ahead of the Shraddh period as well. That explains the kind of registration uptick that we've seen. What's your sense? There's 15-day cool-off period, and thereafter, ahead of festive season, there would be bookings once again?
Hi, good morning. For most of the real estate space, now we are coming towards the festive season, and we will see launches picking up from most companies. So the expectation of those launches doing well is one of the reasons why the stocks have started doing well recently. Another reason, obviously, is the expected cut in interest rate. Interest rate, obviously, purely from a sentimental point of view, is an important parameter for real estate buying. And therefore, any cut in interest rate in US and then ultimately in India is also one of the reasons why these stocks have started doing well recently.
Although, Parvez, hi, morning, Prashant here. The first cut in India by the RBI perhaps only will come through in December. That's the broad expectation. But point taken. I have two questions, Parvez. Stocks have done phenomenally well. And depending on who you ask, you get time frames of how long this upcycle in real estate will last. But as a stock investor, do you now get to a point where you start to look at maybe this is like a late cycle phase where you need to be careful of what you get exposure to, maybe start to book a little bit of profits here, or you think it's got a long way to run? I'm talking from a real estate stock investor point of view. And of course, second is, I don't know if you have thoughts on Century Textiles. Again, it's done very well. Small player, but has, of course, grown quite rapidly, bought a large land parcel here in Mumbai. So a view on that as well. Go on.
Sure. So from a stock market point of view for real estate stocks, our thought process is the valuation re-rating is largely over. Whatever had to happen fundamentally in terms of demand being strong, unsold inventory getting corrected, prices increasing, leverage levels going down, free cash flow improving, all that is either already done or already factored into the prices. So purely from a valuation point of view, for most real estate stocks, the story is over. However, at least for next 3 to 4 years, we are still very bullish on the demand front, and which would mean that pre-sales and ultimately the earnings growth will continue. So the way we look at the sector is for next 3 to 4 years, while multiple re-rating story is already over, you still have a very strong earning growth story which will play out over the next couple of years. Plus, time to time, as I said, any cut in the interest rates would definitely give a little boost to your valuation. So we still remain positive on real estate stocks for the next 3 to 4 years. Talking about Century Textiles, while we don't cover the stock, the company has done well over the last few years. Recently, their business development has been very strong. Like most other organized developers, the Birla Group is also increasing their focus on real estate due to the industry consolidation and customer preference towards recognizable brands. And that is why we feel this company as a whole should also do well. But as I said, we don't cover the stock, so I won't really be able to talk about the valuation part.
Yeah, and soon Parvez will be talking about Raymond Realty as well, right? Because that's also going to be demerged. They have a sizable land bank. But I think we'll wait a while till we get the official numbers, and then we can start talking about Raymond's Realty business. But a lot of the South-based players, the trend in the last 1 to 2 years has been they've all made inroads into outer markets. So, they're going into NCR. Even Puravankara announced this big foray, I think, somewhere in South Mumbai in Breach Candy. They're getting into all kinds of markets, including which were highly prize markets like Mumbai or NCR. What have you made of this development? And again, I go back to that valuation question. While you're positive on the stocks, where do you have the valuation comfort? If you could name your favorites.
Sure. So to answer your first question, South-based players coming into Mumbai is a natural progression. When we look at the industry consolidation part, while historically real estate used to be a localized sector, now we have reached a point that in particular home markets, the top players already have achieved a market share of anywhere between 10 to 15%. Beyond that, frankly, it is difficult to grow in their home market. And therefore, if you have to sustain your growth, you have to diversify into other markets. Godrej was the one who led this whole story a couple of years back. Now we are obviously looking at the South-based players coming into Mumbai and NCR. Even otherwise, I mean, look, DLF will enter the Mumbai market this year. You have Mumbai-based players like Lodha who have gone to Pune and Bangalore. So I think this story will continue of companies diversifying away from their home markets. Because as I said, market share in the home market has already kind of peaked out. So if you have to sustain your growth, the only way is to increase your target market by entering new cities.
Fair enough. So then let's talk stocks valuation. What should be a comfort zone? Because like we've been discussing, many of these stocks are already up 200%, 300% in some cases in just the last 1 year.
So purely from a valuation point of view, most of these stocks are trading anywhere between 30 to 50% higher than their NAV, or you could say a premium to NAV. These valuations are, you could say, close to the lifetime high. But these are also supported by the fact that industry was never consolidated earlier the way it is today. Also, for the first time, these companies are generating free cash flow. Earlier, pre-sales growth was inevitably followed by increase in debt. This time around, while debt levels are at an all-time low, pre-sales growth is at an all-time high. So yeah, I mean, valuations are expensive, but there is a reason, and there's a fundamental reason why those valuations can be justified. As I said earlier, any further chances of re-rating, the answer probably is no. Therefore, we have to just play the earning growth story. With respect to valuations across sectors, as I said, most stocks are trading anywhere between 35 to 50% NAV.
Parvez,
yeah.
Right, we're running out of time. So quickly, if you could tell us, if someone had to put an incremental 100 rupees into the real estate sector, how should they, diversify that 100 rupee, and what stocks, in what order, in what proportion would you recommend they do this?
So we continue to prefer the Bangalore-based players like Prestige, Sobha and Brigade. So out of your 100 rupees, I'll probably put 70 odd rupees in the Bangalore-based players, and the balance 30, you could say, maybe equally split between Mumbai and NCR-based players.
Bangalore-based players implying Sobha, Prestige and Puravankara.
Brigade.
And Brigade. All right, take that point. Thank you so much for joining in and giving us your call on the real estate sector. The sector is doing extremely well, but at the same time, valuations not particularly comfortable at current levels after a big run-up that we've seen in all these real estate stocks. Good time to get in the 9-10 calls.